everlasting. O God of all creation, grant this our request. Help us to build a nation where no man is oppressed, and so with peace and plenty Nigeria may be blessed.
Woo! God bless the Federal Republic of Nigeria. You may please be seated. Thank you all so much. Now, so before we start, I would like to ask if we've all embraced the spirit of camaraderie, because I can see that we're all seated in the same school, right? Have you said hello to someone that you've not met today? Yes, you have? Okay, so I want everyone to look to their left. Some of you are not looking, no, I'm waiting. Look to your right as well. Look behind you, we have someone there. So I want you to mingle. Say hello to somebody that you've not met before. Tell them good afternoon. Welcome them to this event. I don't know what's going on here. Why are you not mingling? You have 30 seconds to do it. I'm looking. I have something for the person. Today is full of gifts. If you comply, you go home with goodies. I saw someone that you've not met. Why three of you? Oh, okay. All right. Amazing. So my name is Bisola Amuda, and I'm the head of human resources for Codros Capital. So it's my immense pleasure to be let me call myself a captain for this debate ship that is about to go off today. So thank you. I think I deserve a round of applause now. Okay. Thank you all so much. All right. So to start, I want to tell us a quick story. And maybe, just maybe, you'll be able to see yourself in this story, right? So there was a boy that I knew. His name was Toby. He was a 14-year-old student in junior secondary school, in a school here in Lagos, right? He wasn't in a business. He didn't have any big dreams of being an equities trader or even a banker. It was just like many of you here, right? So every week, his parents gives him 1,000 naira as pocket money. Most times, he spends it on snacks, biscuits, shawarma here and there, maybe occasional soft drinks after school. Nothing really major, right? Then one day, something changed. Do you know what changed? His school organized a seminar, something similar to what you're all fortunate to be present here today. And the topic was about money, how you can make smart moves, smart investments, starting early. That day, Toby learned something that stayed with him forever. Do you know what that thing is? Okay, I'm going to tell you. So it's basically you don't have to be rich to build wealth, right? You just have to start early, just as you are here now. Start smart and be consistent, right? So with that in mind, Toby got curious, right? And he decided he asked more questions. He read a little bit about it. He also brushed up his knowledge about money, investments, and luckily for him, the company that did the seminar also had a huge investment plan that is tailored to people of his age bracket that could also help him, right? To help him save and invest. So he started, putting a certain amount of his pocket allowance just so he can start building his investment plan. It wasn't something much. I don't know how much was he even getting, but he started bit by bit and gradually. So let's fast forward to 2 years. Not only has Toby been able to build his capacity when it comes to building wealth, there's something that has also changed in Toby's life. Do you know what changed? He now understood the concept of money, right? He has a very small investment, portfolio. He doesn't spend his money as he used to. He started budgeting, setting goals, up to the extent that he even encouraged his cousin to also do the same. And that's because he saw the benefits and then he's able to encourage his family members to do the same. His 60th birthday came. He didn't blow the money like we usually would. He decided to invest it, right? So now Toby is heading into university. And guess what? That smart habit that he started while he was just in junior secondary school has already grown into something meaningful for him. And it's not just in his wallet, but as well as his mindset, right? So I'm sure of you are like, okay, so what's the point of this story? Why is this man telling me this story, right? The point basically is you don't need to be in your 20s, you don't have to be in your 30s to be financially smart. Do you all agree with me? You don't need to be poor to take money or conversations on wealth seriously. You also don't have to wait until you understand, let me say, life. You don't have to be adulting before you start, making smart move and making smart investments. So basically what I'm saying is, just like Toby, you can all make smart steps. And I want us to have it at the back of our mind that this competition is not just about the debate. It's about what I call the 3 Ps. Do you know what the 3 Ps are? Okay, so I'll take it. It's about the 3 Ps. I'll mention it again. Preparation, possibilities, and potential. What's it? Okay. So at Colors Asset Management, we believe that every single child is a milestone, and you are full of untapped potential and greatness. So let me just do a quick survey. If I have anyone here that believes that they have untapped potential, that is full of untapped potential and, untapped qualities that can be tapped into, do we have anybody here? Just him? Okay. So I want you all to say after me. Hi, say your name. Your name? Okay. I am full of untapped potential and greatness. Let's say that again. Are you really saying what I said? Let's take it again because I can't really hear what you're saying. Yeah? Okay. All right. No problem. So basically, what are the reasons why we organize this competition is to help young people like you, to provide them with tools that will serve them for life. So like the financial literacy seminar that we'll be having today. So we basically equip people to be a better version of themselves. So you count yourself lucky for being here. So what do we have lined up for you today? We have a stellar financial literacy session that might just change how you view or how you think about money forever, right? We also have, of course, the friendly battle of the brilliant minds that are going to speak about the hot topic, which is investing in low-risk instruments is better than investing in high-growth opportunities. Do you all get it? I'll take it again. Investing in low-risk instruments is better than investing in high-growth opportunities. And we have 2 schools that will be speaking for this and 2 schools that will be speaking against this. Now, the 2 schools that will be speaking for this are Whitesands School. Do you want to cheer for yourself? Caleb British International School as well. All right, so those that will be speaking against Dowen College. We have the Dowen College folks here. Okay, and then we have Chrisland High School, of course. Great. Right, so before we proceed, I would like to recognize some important personalities in the room. And I will start by introducing the man of the hour. That is the Managing Director for Colors Asset Management. Please, as I'm introducing them, I want you to cheer for them and celebrate them. Please make welcome to the front, Adegbola Aino. Please keep the applause going until he's seated. Thank you so much. Okay, so the next person that will just be joining him is Adenike Ogunyale, and she is the team lead for retail sales and mass affluent. Please celebrate her. This is our brainchild. You guys being here is part of our initiative, so please celebrate her. Okay, so I will then be introducing our judges. I'll be calling them one by one. Because of the interest of time, I'll be reading an abridged version of their bio. These are accomplished people. These are people that have done tremendous in their industries. So just for the sake of time, I will read an abridged version. So I will start with Olayinka Shodipe, who is a finance professional with over 6 years of experience in treasury management, investment banking, and investor relations. He currently serves as the Group Investment Officer at NGX Group PLC, where he leads investment, strategy, and liquidity planning. He is a graduate of economics from the University of Lagos. Olayinka holds FMVA and BDA certifications. His past roles span Verdi IR, Alpha African Advisory. I think he deserves to be celebrated. Please give him a round of applause. And Avon Capital, with a focus on merger and acquisition, as well as financial analysis. He's passionate about fintech and valuation. He has also represented Nigeria in global competitions and co-authored a microeconomics textbook. You can see a further detail, a more comprehensive detail of his bio on the screen. Please let's welcome Olayinka Shodipe to the front. Please keep celebrating him until he gets to the front. Thank you so much. You can have your seat here. Thank you so much. All right, next up, we have Emmanuel Onwuka. He is a radio presenter and communication executive with over a decade in Nigerian media. Based at Cool FM, Wazobia FM, and Nigeria Info FM, he hosts travel and culture and digital live, promoting tourism and tech innovation. Emmanuel is a multi-award nominee and winner, including the Nigerian Broadcasting Award for Best Radio Documentary. I think that deserves to be celebrated. He has represented Nigeria at global tourism events and is recognized for using media to foster cultural exchange and public engagement. Again, you can see a much more comprehensive detail of his bio on the screen. Please let's celebrate Emmanuel as he comes forward. Please keep the applaud going until he's seated. Please celebrate him. Thank you all so much. All right, so I will move on to the third judge, who is Arnold Dublin Green. Arnold has over 16 years of experience in diverse capital markets in the finance industry. He majored in securities and derivatives trading before expanding his career into Africa. He was a director and head of global markets at Apacan Securities in Ghana, covering multi-assets classes as well as business development strategies. Earlier, he was a senior vice president in EcoBank Ghana PLC, where he was a senior portfolio manager on fixed income and currency trading desk. He also worked as the head of execution in Africa Alliance in Johannesburg, as well as a portfolio manager in Nubuke Investments in London with over $120 million in a Pan-Africa focused strategy. Please celebrate him. He is currently the Chief Investment Officer at Cordros Asset Management. Please let's celebrate Arnold Dublin Green as they come up on stage. Please sustain the applause until he gets to the front. Okay, so the lady among them, the queen, her name is Mofoluasho King. Now, she has more than 10 years practice experience. She is a seasoned trust practitioner. She has headed different commercial trust teams at ALM Trustees, PAC Trustees, and Merstem Trustees Limited, respectively, where she garnered experience in handling commercial trust transactions of varying sizes and complexities, including but not limited to municipal and corporate bond insurance, mutual funds, unit trust schemes, syndications, escrow management, etc. She is presently the managing director at Cordros Trustees Limited. Please celebrate her. Mofoluasho holds a law degree from Obafemi Awolowo University, Ile-Ife, Osun State, Nigeria, and a master's degree in international business law from the University of Leeds. She's even in front already. Leeds University. She's also a member of the Nigerian Bar Association and Association of Corporate Trustees. So these are the four strong panel that will be judging the debate today. So they have a couple of criteria that they will be judging you on, but I will get to that in a minute. So let me test the energy in the room again. So when I call your name, for example, if I say Great Whitesands School, I want you to scream great. Are we ready? Are we ready? If you don't cheer for a school, you won't know because it's not my school. All right. Great Whitesands School. It's like you guys are absent too. I'll give you one more chance. Great Whitesands School. Great. Okay, I'll manage it. Great Dowen College. Okay, Great Dowen College. Okay, next up. Great Chrisland High School. Great. I don't understand. I'll take it again. Great Chrisland High School. Okay, Great Caleb British International School. Great. Okay, I'll take it once again. Great Caleb British International School. Great. Okay, I would also like to acknowledge the teachers that chaperone these students. Coming with, the person that came with Whitesands School is Mr. Chikaodi Agu, the birthday man of today. So let's celebrate him once again. Thank you, thank you. For Chrisland High School, we have Taiwo Orimolade. Please let's celebrate the person. The person's not here? Oh, sorry. Please let's celebrate her. She came with them, please. Thank you. So for Dowen College, we have Philip Etema. Is a person here? Okay, I think he stepped out. All right. And then for Caleb British International School, we have Olatoye Olamide and Miss Odrum. Please let's celebrate both of them. All right, thank you all so much. Now, to officially set the tone, so we're going proper into it now. it's my absolute pleasure to introduce someone who I would say not only leads with vision, he is someone that truly believes in empowering the next generation, right? So this man is a thought leader, is an investor, and a firm believer in youth potential. So please make welcome with a lusty applause. I want that applause to be vibrating. The Managing Director of Quadras Asset Management, Mr. Adegbola Aina, for his opening remark. Please keep celebrating him until he gets on stage. Maintain that applause. You guys, I'm not feeling the vibe. Thank you. Thank you all so much.
Okay, thank you so much, Bisola, and thank you everybody. I'll say welcome to Quadras Milestone Debate. This is the 4th edition. We started this 2022, interestingly, and the inspiration was gotten from one of our mutual fund, which is Quadras Milestone Fund. And the fund is targeted at people that want to invest for something significant in their life. The first one we had was 5 years and 10 years. And the thinking was that children are milestones. So tell your neighbor, I'm a milestone. And what does it mean to be a milestone? It means there's something significant about your life. It means that there's a breakthrough about your life. It means that there's something about a landmark about your life. It means that you're different, you're distinguished. I know sitting in front of me today are the next senators, presidents, engineers. I know some years from now, some of you will be managing directors of an investment firm like I am today. And that was the inspiration. And we thought, okay, in Nigeria, financial literacy is something that we need to work on. In schools, they don't teach you about budgeting. They don't teach you about investments. They don't teach you about stocks. I can remember when I came out of school, that was even university. And I was trapped in this Ponzi scheme. I didn't know how it worked, and I believed it. I think they promised us maybe 2,000% return. And it sounded too good to be true. I convinced my mom to also invest in that Ponzi scheme. So myself, my sister, my mom, we all lost money. But interestingly, I got fortunate to work in an investment bank, and I got to know about things like investment, returns, risk. And I've never fallen victim to any Ponzi scheme again. So today, I know sitting in front of me are very, very important people, and I'm privileged. And I will say that thank you for honoring an invitation. We called and it came. The first edition, interestingly, we had Supreme and Harleyfield. That was back in 2022. 2023, we had Corona schools compete amongst themselves. Last year, which was the 3rd edition, we had Grace and Lagoon. And today we have 4 schools. So this is the first time we're having 4 schools. And I can't just wait to see the winner of the competition. But before I get into it, I want all of us to clap for ourselves because we're all champions. We're all winners. So it's not so much about the competition. I think for showing up already makes you a winner, already makes you a champion, and you're a milestone. So thank you, everybody. I don't want to take your time. I'm not the man for the day. You are the men and women of today. But I also want to take our time to just appreciate our teachers that have taken time to just sort of tutor us and prepared us for these debates. So if you don't mind, you can just rise up to your feet and let everybody clap for the teachers. So I want all the teachers to rise up. And I want all the students a resounding applause. Thank you, thank you, thank you. You may have your seats. I would say I wish I had this opportunity several years ago, several decades ago. I know you can't guess my age, but I wish I had this opportunity. And I want to say don't miss the opportunity. I think today should just start something new in your life. I believe some of you are already investing, and if you're not investing, whatever knowledge you're taking from today, begin to put it to action. Also to thank our judges as well. Some of us had to wait. Also to apologize for starting a bit late. We just have to ensure that things are put properly. So sorry for starting a bit late, but to appreciate our judges, thank you so much. Our external judges, our in-house judges, thank you very, very much. And of course, our media partners, thank you very much. So welcome again, and I will say, may the best school win. Thank you.
All right, thank you so much, GB, for setting the right tone for what promises to be a very inspiring day. So next up, the person that I will bringing up next, just before we get to the debate part, is somebody that was speaking to us about financial literacy. Does anybody understand what that means? When you hear financial literacy, what comes to mind? Anyone? Yes, please. Please pass it to her.
Okay, to me, financial literacy means how money is handled, how a person views money, and how a person views how to manage their money, like what to spend on and how to save.
Amazing. Please celebrate her. Let's clap for her. Anybody else wants to try? Just one more person. Anybody else? Oh, yeah, sorry. No, you can say.
To me, financial literacy means understanding the concepts behind money. How can money be properly managed? How to properly budget yourself and proper risk management when investing.
Okay, amazing. Please let's celebrate him as well. All right, thank you all so much for that insightful answer. For those of us that don't have a full understanding of what it means, don't worry, that's why we're having, or that's the purpose of bringing the experts that's going to speak to you all about financial literacy. Now, this person is somebody that is not only apt at portfolio management, but she's also somebody that is passionate about smart investment, saving smart as well, and just something called getting them while they were young. So please make welcome my colleague Zainab Eyowawi as she comes up on stage for the financial literacy. I'll call it masterclass. So please celebrate her until she gets on stage.
Thank you, everyone. Good afternoon, everybody. Good afternoon, judges. Good afternoon, schools. Good afternoon, teachers. It's an honor to be here doing this today. And like Bisola rightly mentioned, my name is Zainab Eyowawi, and today we're going to be talking financial literacy. And hopefully at the end of today, we'll be able to take something meaningful out of this, and I will be able to help you start your investment journey. While Bisola was speaking earlier, she gave an analogy and she told you a story concerning Toby. With every penny that Toby gets, Toby spends it on anything he lays his hands on. He buys anything he likes, gets shawarma, because he didn't have any knowledge. But an encounter like this, shaping Toby's mentality, helped him with his financial literacy ability, and then the rest, they say, is history. So while we were also introducing ourselves earlier, we're also answering the questions concerning, I think, 2 truths and 1 lie. About 2 people mentioned that they had a business, and it turned out to be true. I don't know, please, if you were the ones that answered that questions, can you please acknowledge yourself by wave of hands? Thank you. Please, what's your name? Ella. And what's your name, please? Tenny. Tenny and Ella, please, could you indulge me by answering questions on how you better undo your money from your business, your profits and whatnot. What do you do with them? Do you spend them or do you reinvest them into your business? Please, can someone give her the mic? Thank you.
Okay, so I'm 10, right? And like half of the money I get, right, I give it to my parents to like keep in my bank account for me. And like the other half, I either save in myself, because like it's mostly in cash. I either save in myself or I spend it on myself.
What do you buy?
What do I not buy?
So of all of the things that you buy, do you get returns from anything or are they just consumables? Hi, Tenny. I said, from the things that you buy, do you get returns from them or are they just consumables?
Most of them, I consume them.
All right, thank you. Please, can you pass the mic to Ella?
All right, so when I get profits, right, I take some of the money and I save them because, I like, as a family, my dad, does this farming investments that he's, bringing up. So I also use that to help him out. and from there, all of us benefit from it. So, and some of them, I also save them myself because my mom actually indulges us in saving. And from the one I saved, if I need like, new materials to like improve my crochet business, that's what I use to like buy materials and stuff like that.
So you basically invest and also reinvest into your business.
Yes,
okay, thank you. So today we're going to be discussing smart money habits as a guide to financial literacy. And like I said, I hope that at the end of this session, we would pick one or two and start or kickstart our investment journey. Please, can I have my slides up? The next slide, please. Yeah. So here, this quote says, if you fail to plan, you plan to fail. And this basically applies to every aspect of our lives. You have WAEC coming up in maybe a year or 2 years. If you fail to prepare for your WAEC examination, you definitely get the reward of whatever it is that you did during that time. If you study, you are going to pass. If you do not, it's going to be the result of not preparing. Same applies to money. You have an achievement, or you have something that it is that you look forward to achieving, and it has to do with money. If you fail to put money aside, wishes will just be us's. And now, this is me talking to you about money. It says that out of 100 people at retirement, about 54 will be broke. Not because they didn't have money earlier. Some probably did, and they lacked financial literacy. They lacked financial information. They didn't know how to set money aside for their future, and then they will end up broke, dependent on family, and also maybe be a charity or old people's home. And 36 would most likely be dead. About 5 will still be working because they have to, not because they want to. They have to because they do not have anything to go by their daily lives, and then they have to put in the work even when they're supposed to be resting because they have to make ends meet. And about 4 people will be financially secure. But it says here that only one person will be wealthy. And now we're going to have to understand how that person is going to go about it to be wealthy. And that brings me to financial literacy. About 2 people answered the question earlier. And if I may say, I was impressed because financial literacy basically means how you handle money. The money you get from your business, the money you get from your parents, your allowances for school, or maybe on your birthday, the monetary gifts that you get. How do you handle them? What do you do with them? Do you buy the next thing that you see on maybe social media? Do you buy the next thing that you see online? Do you buy the next thing that you see on your way to school or your way back from school? Or do you actually have the intuition to divide the money into different places so that it provides returns for you? What do you do with your money? Financial literacy in teens also means that being financially responsible. At a very young age, I remember having a very small box. In Yoruba, we'll call it kolo. And old age, in English, we'll say piggy bank. For every 15 naira that we get, we're throwing it in there because Christmas is coming and everybody wants to buy a knockout. You might just see it as something, but then you are wasting your money. We had a goal. We had a clear goal. And that goal is, if everybody is throwing knockout and shouting Merry Christmas or Happy New Year, I do not want to be left out. I do not want to go meeting my parents and crying and say, I want to buy a banger, and they'll tell you, no, I can't give you money for banger, it's dangerous. Sometimes you want to indulge. So every 15 naira, we throw it into our kolo. Every 20 naira, we throw it in there. And at the end of the year, there's a competition. Who has saved the most? We break it and we count our money. There's a fulfillment that comes from it. Having my own money to buy something that I want. Having money to buy a water gun during Christmas. Having money to buy Father Christmas wristwatch. So these are goals, although they are different. As babies, we want to buy knockout. As we grow older, when I'm going to school, I want to buy... What would you like to buy when you're going to university? Oh, interesting. Yeah, I want to buy lip gloss. I don't want to go about having chapped lips. As we grow older, in 2 years, I want to have this car so that it's convenient for me because it's actually not a luxury, it's a necessity if you want to go about your daily lives easily. In 5 years, I want to have my own house so that my children will be comfortable moving around. These are goals. These are things that you look forward to investing in so that you can actually have a fulfilled and a happy life. Because if you say money makes the world go round, and having money and knowing how to manage money and invest in money makes you also happy. And this brings us to personal finance and budgeting. Personal finance is not far from the meaning of financial literacy. It basically means how you handle your money, how you handle your finances, planning and managing your money as efficient and effective as possible so that you get a return. Tenny has made 500 naira from selling, what did you sell, Tenny? Oh, you crochet. She has made 500 naira from crocheting, what's it called? Maybe a handband or a handband, and then 100 naira from it is everything that she spent to get her crochet tools, from the pin to the hole. She takes it out, and 400 naira is left. Tenny says, oh, I want to keep 200 naira for food, for clothes, and maybe for my writing materials in school. And 150 naira is left. I want to take 30% of that. I want to put it somewhere because next month we're going to a competition. I want to look my best. I want to buy the best socks. I want to buy designer socks. So that's when I'm up here presenting. When it comes to awarding how you look, they'll say, oh, you had the finest socks or something. Or I want to buy the next fine pen. I want to buy an iPhone when you make more money. These are the money, or this is the fund that you pick from your business and put in your wants. And then the other 20% will go to savings or investment. But now, this is where it plays out. When you make money and you want to divide it, other than money that you get from your parents, money that you get from your business when you start working, the first thing that you should look forward to is saving and investing. That should be the first money that you take out from whatever it is that you make. Because it is easy to write, it is easy to plan, but it is not easy to follow through. A whole lot of us will say, oh, when I get my money, I'm going to do this. But the next distraction that you see, you have gone to buy it. So that's where it comes into play. And for you to be able to do this, this is basically the art of budgeting. I will not come to tell you, oh, budgeting is planning and this. This is basically the art of budgeting. You have made money. You have 100 naira. You take 50 naira of that money and put it in your needs. These are important things that you have to go by your daily lives. The things that you need to eat, the things that you need to wear to look presentable at work, in school, your socks to look neat. Your writing materials, because that's how you are able to put down the things you are taught in school and actually read them and have a bright future. And then the next one is savings or income. You don't want to go back tomorrow to start asking for money for the same things. You want to be able to afford things that you want. In next 2 years, I want to be able to buy myself the best wristwatch. Or in the next 2 years, I want to be able to start a course. I want to buy a course on Udemy, and I don't want to disturb my parents. That's where it comes from. Because once you put it aside, once you earn a return on it, you can actually even use the return to buy that course. And for every indulgence that you have, this is where it comes from. 30% of your income, for wherever you make it, goes into that. And cases where you don't spend it on the designers that it is that you want, it is advisable that that money actually goes back into your savings and your income, as it helps you earn larger returns, because it's believed that the larger you save or invest, the larger returns it is that you earn. The next slide, please. And here, we're going to be talking investing. We've spoken about personal finance, how you manage your money, how you budget, basically the 50, 30, and 20 rules. 50% for your needs, things that are very important. 30% for your wants. You want to indulge yourself. Of course, you have to. It's life. And 20% for savings or investment. And now, I know that a lot of us will say, oh, I'm too young to start saving. Oh, I'm too young to start investing. The 5 naira you save in your colo today, the 20 naira, the 1,000 naira, the 500 naira, makes a large sum of money. And you can take all of those funds and use to start your investment journey. And that's where investing comes in. Investing is basically allocating your resources. Resources here is money, your income from parents, from selling, from coaching, from allowances that you get, and putting it in an investment basket, financial instrument that earns you a return. Regardless of how small, you still earn a return. Once you spend that money, you do not earn anything. Once you leave it under your pillow or under your bed, you do not earn anything. But investing, it actually gives you a return. And that's basically the art of investing. For you to understand investment, for you to begin, I do not want to bore you, but there are things that you have to understand. First, I'll say your risk appetite. I don't know, does anybody understand or know the meaning of risk? What does it mean? Please, can you get him the mic? Or can you speak loud enough? Thank you. Please, what's your name? Thank you, Sam. Sam what? Oh, thank you, Abdul Samad. That's basically what risk means. Risk means how much loss it is that you are willing to take. And there are a whole lot of us that once you hear the next good thing or the next big thing, you are putting your money inside without actually understanding what it means. Are you willing, if it sinks today, are you willing to let go? How much can you let go? If you are not able to let go at all, how much or where is it that you understand to put your money into so that if push comes to shove, you're not going to be sad. You understand that it's actually part of investing. And there are so many people that are willing to tolerate risk. Oh, if I lose all my money today, I understand that tomorrow it's investing. Tomorrow I can do better by understanding what I'm putting my money into. And people that will say, oh, I don't want to lose my money at all. Even if it's to come back and meet the amount I put there, I'm very comfortable. So you have to understand the kind of person that you are. Are you willing to lose all your money? Are you willing to lose a part of your money? Are you willing to lose 50% of your money before you start investing? And there are different financial instruments that can help you with that. Oh, I don't want to lose my money at all. There's a protective basket that you can put your money into where you are not going to. Although risk is inevitable, but it's very low, it's minimal. It protects your money. But there are ones that are very volatile. Today, your profits can go from, or your money can go from 100 naira to 150. And the same vein, it can go from 100 naira to 75 naira. Are you willing to take that kind of risk? Once you understand your person, and then you can start investing. Also, returns is belief in investing that the higher the risk, the higher the returns. So that was the analogy I gave with your money moving from 100 naira to 150 today, and from 100 naira to 80 naira or 75 naira tomorrow. That's where the risk comes in. Because it's very volatile, the return on that investment or that instrument is very, very pleasing. However, with the protective basket, oh, I don't want to lose my money at all. I want my money to be the same thing. That's the basket that's for you. You probably have 10%, 5%, 8%, but you earn something. That's what's the meaning of return and risk. That's how you have it. For time horizon, like I said, you probably want to invest to buy a car. You know that, oh, you are investing for probably a long period of time. You want to invest to buy a course. You hear that, oh, maybe Python or software engineering is the next big thing and you would like to learn it, and you have to maybe gift yourself as a birthday gift. You probably start from the beginning of the year to start saving or investing for that before your birthday. It's probably going to be a short period of time. So you have to actually understand the time horizon bit for your goals before you start investing. I want to buy a course today, short term. I want to buy a car. I want to buy a house. Those are long-term investments, and you have to ensure that your investing goals tallies with your time horizon so that you can actually achieve them. And knowledge. It is very, very important to understand what you are investing in. A lot of people have lost money to Ponzi schemes. A lot of people have lost money to betting because they do not understand what they're actually investing in. They just heard somebody say, oh, I put 1,000 naira in this thing today. I've made 2,000 naira tomorrow. And you're saying, oh, please inform me, tell me, how can I do it? I want 2,000 naira also. But you do not understand how they've been able to return 2,000 naira to the person. You don't know what they are investing in. And with that, with lack of knowledge, one tends to perish, even in investment. So you have to really understand what it is that you're investing in before you can start investing. Even as a young adult, once somebody tells you, do this, you can pick up your phone and type on Google, what does this mean? You get an understanding. You can further ask questions and not just follow the train because you want to invest. You tend to lose a whole lot of money that way. Please, the next slide. So here, these are principles of investing. 1, start early. It's believed that once you start investing early, especially at this age, you're probably able to take a whole lot of risk because you know that you still have time to work and make your money back. But for people that are way older, if they tend to put their money in very risky assets, they could lose it and they probably do not have time to make it back. So starting early helps you lose money, maybe help you recover it, and you're also able to have a whole lot of money long term. Because at this age, you probably have 1,000 naira, 1,500, 2,000 naira to invest. The more you grow and the more you make more money, you are able to save or invest more, and you're also able to make more. So starting early is actually key. And you don't have to have billions or trillions of naira to start investing. your 5,000 naira, your 10,000 naira, your money for your shawarma can help you start investing. You also have to plan. Plan, have a goal. Oh, this is what I intend to achieve in the next year. This is what I intend to buy for myself in the next year without disturbing my parents. This helps you save. You are not just saving because you want to. You have a clear goal. You know whatever it is that you have to achieve, and that helps you save or invest towards it. You also have diversification. If I have 3 baskets here, and I put all my egg in one, if I kick that one and the egg falls, or if the egg falls, do I have any other egg to eat? But if I have 3 baskets, and I equally share my eggs in those baskets, and maybe I accidentally kick one, would I still have any other eggs to fall back to? So that's how investment basically works. You cannot take everything that it is that you have or that you have earned and throw it into a basket. You are supposed to be able to divide those baskets equally, invest in different things, so that whenever you need things to fall back onto, you are able to actually pick it. If one investment is losing, another one is probably appreciating, you are able to take profit off that one, and it actually helps you in the long term. Have a goal, like I explained earlier. Have a goal towards investing. Have a goal towards saving. It helps you achieve whatever it is that you want. And also, risk appetite, avoid noise. Don't join the train. Don't follow the train. Oh, Toby, I made 5,000 naira yesterday from investing in this thing. From investing in this thing that they spoke about on the radio yesterday. And the next thing, Toby is putting his money there. He does not even understand what it is. But because his friend has made 5,000 naira, he also wants to do the same. Avoid the noise, learn, gain understanding and knowledge of whatever it is that you want to invest in so that you can start your investment journey. Please, the next slide. So these are basically the do's and don'ts of investing. Yes, acquire knowledge, understand whatever it is that you want to invest in, but don't be overconfident. Oh, I monitored this stock yesterday. They've promised 100%, or my analysis has showed that they are not going to fail. Whenever you put your money inside, 20% is 20%, 30% is 30%. Anything can happen. Markets can shift. I don't know, there could be news tomorrow that, oh, maybe the product of this particular company that you have bought is bad. People tend to sell. Once they hear any little news or bad news about a particular company, there are investors that start to get jittery. They want to sell off because they want to make their money. Events like that could cause you to lose money. And because you've been overconfident, you probably also would just leave your money there and you catch the falling life by also losing money. So don't be impatient. Oh, like my analogy says earlier, somebody has told you that they made 5,000 naira. I also want to go and put my money inside. You don't even understand, but you just want to put your money in it. You tend to lose. And also, no or poor diversification. Remember to not leave all your egg in one basket. Have an account that gives you steady return. Have an account that helps you grow your fund. And also have an account that probably just protects your money. Maybe for your everyday transaction. Transactionary. Forgetting the 3 tenets of having money. Who remembers the 3 tenets of having money? Transactionary purpose. And so basically, these are the things that you have to understand to actually put your money or keep your money. Have an account for transactions, have an account for income, and have an account for protection, or have an account for growth. That way, you are able to have different accounts to follow to. Also, regrets. You cannot always be right. Like I said, you probably made your analysis, and you are very good at it. Your analysis has showed you that, oh, this stock is a buy. You can go ahead to buy it. There could be news tomorrow that, oh, the truck of a company had an accident or hit somebody. People do not like to hear bad news. The first reaction will most likely to be to sell that stock. It doesn't mean that you've made a bad investment decision. It's just that unforeseen circumstances have allowed people to want to sell. It will most likely rebound when people understand that, oh, this company is there to make money. Also, chasing trends. It's not everything that you have to buy. It's not everything that you hear that you have to invest in. You have a goal. Save towards it and let it materialize. And don't say, oh, and I just invested in this thing yesterday. You should have told me. Let me go and take out my money. You could lose that money. Set a clear goal and stand towards it. Once those goals have materialized, you can go ahead to understand different investment purposes or different investment baskets that you have, and you can go ahead to invest in them. Also, emotions. Any little bad news, you are scared. It doesn't mean you've made the wrong decision. It could just be that at the moment, there are short-term volatility that's affecting that is affecting the performance of whatever you've invested into. But long term, always learn to play the long-term game. Long term, you could earn a lot of interest or earn returns that could actually be in line with your investment goals. Please, the next slide. And these are benefits of investing, financial goals. You want to, you need 5,000 naira to invest in your learning culture or Udemy in the next 2 months. You have the 5,000 naira now, but it's not time for you to pay for it yet. Investing means that you could earn money or you could earn return on that 5,000 naira. And when it's time for you to pay, once you take out your money, you still have something to fall back to. You probably have earned interest on that 5,000 naira. So basically, have financial goals. Understand why you are investing before you start investing. Also, compounding power. Compounding basically means, in layman terms, earning interest on interest. So the 5,000 naira analogy, you probably invested it in something that will give you a return in 3 months. After 3 months, they've paid that return into the account. Once you want to start earning any return again, you are going to earn a return on the 5,000 naira that you initially put in that account and also on the initial return that was paid. I don't know if you understand. You've invested 5,000 naira. At the end of 3 months, I give you a return of maybe 1,000 naira. You now have 6,000 naira. If you are going to earn anything at the end of another 3 months, you are earning it on the 5,000 naira that was initially there and also on the 1,000 naira that you earned earlier as a return. So that's what compounding basically means. You earn returns on returns. Also, wealth building. Saving is enough. Saving is fine, but it is not enough to build wealth. It's not enough to give you the return that it is that you want. You can put money in your colo or in your piggy vest. Whatever it is that you put there is what you are going to find there tomorrow. But once you invest, you know that there's a very high potential for you to have a huge return. If it's not fixed, if it's fixed, you are able to calculate whatever it is that you're going to get in a particular period of time. If it is not, if it's growth, you are able to probably estimate whatever it is that you're expecting. So that is how wealth is built. It's not by putting money under your pillow or by keeping it in your wardrobe or by putting it in a colo. You can start off colo to have a significant amount to start investing. But investing it helps you multiply that money. And that's where the power of compounding comes in. Also, regular return. There are mutual funds or there are investments that will give you return every 3 months. And you already have at the back of your mind that at the end of 3 months, this is what you are expecting. And you can actually plan towards that money. That could be the funds that will probably cover you for the next 3 months while you do not even touch your actual principal. And long-term return. Always play the long-term game. However it is that you have short-term goals, I believe that we also have long-term goals. So long-term goals also means that long-term investing, and it helps us actually actualize our dreams. And now we are just going to be talking about the Codros Milestone Fund, which I believe is why we are here. So like we said earlier, like my MD said earlier, Codros Milestone Fund, like the name implies, it's a milestone fund. It's an investment that was started for you to achieve your milestone goals. Oh, I want to buy a car in the next 2 years. That was the goal behind it. I want to be able to go abroad to further my studies after my bachelor's probably in Nigeria. This is the kind of investment that you need. It helps you invest to achieve your milestone goals, your milestone dreams. And the milestone fund, you don't even need a whole lot of money to start. And at the time it was created, you needed just about 2,500 naira to start your investment journey. But it has grown. And the more it grows, the more the price increases. And now we have the current fund price to be 198 naira. 2 naira less than 200 naira per unit. And you need about 25 units to begin. So how much do you need? Let's do a quick math. 25 times 198 naira. I'm sure that's about, give or take, maybe 3,000 naira or 3,500 naira. That's how much you need to start your investment journey. I'm sure a whole lot of us use that money to buy shawarma. So you can begin your investment journey with less than 4,000 or 5,000 naira. And subsequently, you need just 10 units, which is less than 2,000 naira, to continue your investment journey. Remember, you don't need a whole lot of money to start, but you just have to put money aside to start. I hope with this, you are able to kickstart your investment journey and learn to set money aside for goals and priorities. Thank you.
Thank you so much, Zainab. Thank you. Please celebrate her.
I will now take your questions if you have any.
So we can take two, if we have any.
Okay. I'll take that there are no questions and everything is understood. We're here to help you start your journey.
All right. Thank you so much, Zainab. Please, let's celebrate her once again. Okay, so we'll be using 5 minutes to take a tea break. I'm sure they're already going around to share your stuff so you can eat if you already have yours. The debaters can also start eating if you want to, because up next is the debate. And since you guys said you don't have question for her, so I have question for you. At the beginning, I had surveyed to know or to have an understanding of who knows what financial literacy is. So after our presentation, I'm sure the number should have increased, yes? Okay, so who can then define financial literacy now? The uncle that said yes there.
I think financial literacy entails the understanding of the concept of money, capital, interest, and how saving and investing can benefit companies and individuals.
Amazing. So you obviously listened. Please celebrate him. Give him a round of applause, please. Anybody else that wants to try? Okay, all right.
Financial literacy is the ability to understand the value of money, how to manipulate it, and use it to make good decisions.
Okay. Amazing. Please celebrate him as well. Anybody else? Anybody else? Nobody else. Okay, so she mentioned some do's and don'ts of investing. What are they? Zainab. Zainab is the do's and don'ts of investing. No, I'm not saying her name. So she mentioned, yeah, Zainab. Her name is Zainab. You, okay. Can you echo it? Okay. 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 Okay, that's good. Anybody else? Okay.
You should not be impatient, but rather you should time the market.
Don't invest based on impulse. That means don't invest emotionally. Think and do proper analysis before investing.
Amazing. Anybody else? Okay.
You should diversify your portfolio because if one stock fails, you always have another to fall back on, and you generally make profits.
Okay. Amazing. I think I saw two guys there with their hands up.
You shouldn't follow trends when investing.
She also said diversification, and she explained this by saying it's not wise to put all your eggs in one basket.
She warned against overconfidence in making trends.
Yeah. Okay. All right. She also mentioned some principles of investing. Who wants to try? Okay. Sorry, Adrian.
One of them is that you should start early.
You have a question? Okay. For Zainab? Or just general?
He said that we should not trade based on trends, but should you not monitor the trend of the market before you invest? If it is known that this price keeps bumping up, why don't you find a proper entry into the market and grab on the trend? Thank you.
Is Zainab somewhere here? Can someone get me Zainab, please? Okay, so there's a question that came from your presentation. I'll have him take it again so he can answer.
You said don't trade, don't invest based on trends. But shouldn't you monitor the trends of the markets before investing? If you know that this price is going to keep bumping up, why don't you wait for the market to shake a bit and then come to your entry and invest? But then you said that we should not invest based on trends. That's my question.
Trends that I meant was anything that you hear, oh, your friend is investing on this thing. and you already have your investment locked in something. What did you say? Oh, that's very good. That's okay. Ask questions. And yes, you should actually monitor the trends of the market. There are times that you probably have your money locked in the shares, and the price has moved significantly beyond your profit-taking price. It's okay for you to sell at that price. It's okay for you to monitor the trends and say you want to take profit. And there are times you have probably been monitoring a market or an investment that you want to enter, and it has sold down beyond your entry point. It's a good time for you to go into the market. So yes, please monitor investment trends to find a good price to buy or to sell. But however, it's not everything that you hear that you invest in. So that was the trends I meant. It could be Ponzi scheme, but because you do not understand it and your friend has told you that you are going to make a whole lot of money, you put your money in it and you get burnt. So that was the trend I meant. But please, by all means, monitor your investment trends to get the best price to buy or the best price to sell. Thank you.
All right, thank you so much. All right, I would also like to recognize someone that came in while we're having this discussion, and I want her to come to the front. Please make welcome Doinsola Ola. She is the Managing Director for Cordros Wealth. Please celebrate her. Okay, so on a lighter note, as we're about to start the debate, I'd introduce the 4 judges. Tell me their name and where they are currently working. Anybody wants to try? Anyone? Should we start with just their names? Anybody? You? Okay.
His name is Mr. Arnold Dublin Green.
Investment officer. Please clap for her. Somebody else raised their hand here. You wanted to say, so what's his name? What's his portfolio? No, she has a law degree. So he's a chief investment officer. Anybody else want to try? So we're not listening when I was introducing them. If I just say Arnold Dublin Green, Arnold Dublin Green. Okay, anybody else? We have three more. You can just try their name or yes. Are you able to echo it from there? I know. Emmanuel. Okay, where does it work? You can't remember. Okay, you tried. That's a fair effort. So anybody else? Anybody else? Just so we can start. Sorry, just a minute. Okay, I would like to remind you that there are gifts for winners. So far, I don't have a winner. Oh, now you want to try. Okay, I'm coming.
I think you said his name is Mr. Olamilekon, and he graduated economist, and then he's a financial analyst.
Please, can Mr. Olamilekon raise his hand? You want to try? No, his name is not Mr. Olamilekon. I'll tell you the answer. Hold on.
Mr. Olayinka. I can't remember.
Miss Mofeoluwa King, but I don't know where she worked.
Oh, Mofeoluwa King. Okay, so you tried. She's the manager director for Cordros Trusts Limited. Okay, so I think the person you are trying to say is Olayinka Shodikwe. Was that the name? Okay, so he's the group investment officer at NGX Group. And you all got Arnold, and somebody else mentioned Emmanuel. Who was the person? Yeah, so his name is Emmanuel Onwuka. Okay, so we'll proceed to what we've all been where are the debaters? Okay, please, you can go back to your seat, just so we can start. The others, did they step out? Okay, they're all coming back. Okay, we're expecting 2 more people, right? Do we know where they are, please? Okay, which school is not there? Do we have Dowen there? Sorry? Whitesands. Ooh. Huh? Okay, so we'll just give it a minute because I wanted to explain the criteria that they will look out for, but they would need to be here to listen to it. So I hope we can get them in soon. So again, the topic that they'll be debating on is investing in low-risk instruments. Is it better than investing in high-growth opportunities? We have 2 schools that will be for the statement, which is Whitesands School and Caleb British International School. So we'll start with those 2 schools first, and then we have those that are speaking against. That's Dowen College and Chrisland High School. So that's why I need the guys from Whitesands to come in so we can start. Andrew, can we check where they are, please, so we know? They're already coming. Okay, thank you so much. Okay, great. All right, so I'll just be explaining what the scoring template is and what you'll be judged on. The first one is on your volume and clarity. That's your ability to speak loud and clearly. So for us to be able to understand and hear what you're saying, that's 20%. Then we'll look at your courtesy, your greetings, your opening statement, your salutation, as well as your closing remark as well. That's also 20%. Then we'll look at your diction and fluency. That's how fluent you are in speaking, your pronunciations. That also carries 20%. Then your organization and clarity. That's how you're able to organize your thoughts, prove your argument, basically just communicate your thoughts and the relevancy of whatever you're saying to the topic. Now, the last one is on your persuasion. That's your ability to present your argument and, convince us for whatever motion that you are, whether you are for or you are against the statement. So in total, each school has 7 minutes. We have 2 speakers. The first speaker will come up and speak for 4 minutes, right? And then after 4 minutes, the second speaker comes up and speaks for 3 minutes, have your closing argument, whatever it is that you've decided. I will be the timekeeper, so I need you to watch out for when I'm telling you the countdown. When you start 4 minutes, you hear me say start. When you reach the halfway, that's for the first guys. When you get to 2 minutes, you hear me say 2 minutes. When you have 60 seconds left, I'll let you know. 30 seconds, 15 seconds, and then the countdown from 5, 3, 4, 3, 2, 1. Did we get that? Do you need me to repeat anything? It's clear. Which part? The time. Okay. So for the first speakers, you get 4 minutes, right? You come up here, you have 4 minutes to present your arguments, whether you're for or whether you're against. Then I tell you the countdown. Once you have 2 minutes left, I'll let you know so that you can start wrapping up if you've not yet started. Then when it's 60 seconds, I'll let you know. 30 seconds, 15, then the countdown from 5. It's clear now? The same thing for the second speaker. You have 3 minutes. I'll let you know when you have, let's say, 1 minute and 30 seconds left. Then 1 minute, 30 seconds, and then the countdown 15, and then to 5. Yes, please. Can you do a joint presentation? Do we allow that? They can do it together? Okay, so yeah, you can take your 7 minutes. I would also like to clarify that even if you come with like a slide or have a presentation, it doesn't give you extra mark. It's good, A for effort, but it doesn't add anything to whatever it is that they are scoring you. We love that you are being creative, but we would not score you based on that. So thank you so much for your creativity. Now to officially start. Yes, please. Do you have a question? No, we can't go to you. You want to give them? So he's asking if the first speaker does not use up their time, do we add it to the second speaker? No. So make best use of your time as you can. All right, are we ready? Okay, so we'll be starting. Okay, I was wondering where the sound came from. All right, so we'll be starting with Whitesands School. Whitesands School, are you in the building? Keep on cheering. The debate has not started and you've already lost guard. Okay, so we have two people representing Whitesands. That's Chie Doziem Adeogo and Olisemeka Chukwuwike, sorry. Who is the first speaker? Chukwuwike. Okay. Sorry? Okay. Oh, okay, sorry, Chinedezem. Okay, you can come forward, please. Second speaker should also be on standby, so when it's done, the transition will be easy. Okay, so like I said, you would have 4 minutes, just a minute. I'll let you know when to start. And your time starts now.
Good morning, panel of judges, the accurate timekeeper, teachers, and my fellow debaters and the audience. My name is Chidizim again, and my partner, we proudly support the motion that investing in low-risk instruments is better than investing in high-growth opportunities. Let's begin with the basics. Before anyone starts investing, the first rule is simple: do not lose your money. Low-risk instruments like treasury bills and saving bonds are typically backed by the government, which makes them safer options and they ensure guaranteed returns. For example, if a student saves 50,000 naira in a treasury bill for 3 months, they'll get their money back in addition to interest. Similarly, investment firms offer low-risk options such as money market funds, where your capital is preserved and you can earn steady interest. On the other hand, if that same amount is invested in a risky cryptocurrency or a fast-growing business, a fast-growing company, you can lose all your money in one day. Furthermore, though high-growth opportunities like tech stocks or cryptocurrencies offer huge amounts of profits, they are like playing a game of chance. Chasing huge profits means taking huge risks, and those huge risks can lead to huge losses. At the end of the day, not everybody is Warren Buffett. For example, if you invest all your investing savings in a risky cryptocurrency only for it to crash overnight, you might as well kiss your dreams of becoming an university graduate goodbye. That's how risky high-growth investments can be. Low-risk options like money market funds are structured to grow steadily while preserving your capital, a safer path for students and new investors. Finally, another key point is that liquidity is crucial, especially for students and families that need quick access to cash. Many high-risk investments can lock up your money or penalize you for early withdrawal. In contrast, low-risk options typically offer more predictable access. For example, Quadros Money Market Fund allows investors to redeem their funds within 5 business days, making it a more reliable means for investors. This kind of access helps investors to stay financially prepared for unexpected needs without risking their capital. With these strong foundations laid, my partner will now take you further into why low-risk investments are better than high-risk investments. Over to you.
Just a minute, please. So you're done with yours? Okay, so you had 1 minute, 21 seconds left. So just a minute so I can start yours. Okay, so your 3 minutes starts now.
Thank you, Chiyodozie. Good morning, panel of judges, teachers, fellow debaters, and the accurate timekeeper. My name is Olisao Bik, and I'm here to stand in support of the motion already started by my partner, which says investing in low-risk instruments is better than investing in high-growth opportunities. Let's now talk about something very important, the future. Investing in low-risk instruments offers you predictable planning. We all have financial goals that we would like to achieve, whether it be retirement, buying a home, or simply supporting our families. How do we plan for that? By using predictable investments. High-risk instruments offer roller coaster returns that are very volatile and aren't useful for planning for the future. Whilst low-risk instruments tell you when you get your money back and how much money you get. For example, FGN bonds stated for January 2025 can be set for 2 or 3 years, returns of 17.235% or 18.235%. So that means you know how much money you're going to get back and when you get it back. Another point is time matters. I know everyone can wait. Nobody knows how much time they have left to live. So how can you spend that time waiting for returns that you may never get? Many high growth opportunities take 5 to 10 years to yield returns if they eventually yield returns. But life doesn't wait. People use investments to meet their daily needs. And low-risk instruments such as annuities, which pay every month, can be used to help people meet their daily needs. People also have short-term financial goals they have to achieve. And low-risk instruments like corridors, treasury bills can be used to meet their short-term financial goals because they can have a length of 30 days to 1 year. Then there's the issue of volatility, which leads to sleepless nights. Watching your investments go up and down every day is stressful. Imagine coming home and you see your investment drop by 30%. That's not fun. That's panic. But this risk is not real with low-risk investments. Low-risk investments are steady, stable, and reliable, so you don't have to worry about your investment fluctuating. In our lives, we all have things we already worry about. Students worry about exams and assignments. Parents worry about paying
60 seconds.
Parents worry about paying school fees and putting food on the table, while regular adults worry about fending for their daily needs. So why we add stress to our life with our investments? In conclusion, while high growth opportunities are very exciting, it comes with a lot of risk. It's not all as it seems. It's very unreliable, and it comes with a lot of uncertainty. Whereas low risk instruments do not come with those risks.
30
Those
seconds.
instruments offer safe and reliable money. A tech bubble, a crypto crash, a housing collapse. History tells us one thing. Just chasing high growth often ends up in disaster, but the quiet bond, it quietly
15
survives
seconds.
them all. Let's just remember that the main point of investing is not to show off, but to grow stably and steadily. Thank you.
Woo! Let's clap for him, please. Please celebrate them. Thank you all so much. All right. So those were the guys that represented Whitesands School. Please celebrate them once again. All right, so we're taking the second school, who is also for the topic. And they are from Caleb British International School. We have Oyeleye Isabella and Sanusi Samad. Who is the first speaker? Okay. So as explained, you have 4 minutes. All right, so your time starts now.
Stability over speculation. Good day, honorable educators, valued opponents, and esteemed audience. As I stand parallel to the wall and perpendicular to the ground, I can firmly stand on the fact that investing in low-risk investments is better than investing in high-growth opportunities. Before I begin my arguments, let me be clear. This is not an argument against growth or ambition, but an argument for prudence and sustainability. Characters that the low-risk instruments embody, but the high-growth opportunities often lack. Beginning into our first point, preservation of capital and financial security. Let's go back to 2008, where we had financial crisis, one of the biggest ones since the 1930s, which began from the United States housing section. Individuals who invested in low-risk instruments like government bonds, blue-chip investments, or fixed deposits, they had almost no problem. They were relaxed. While individuals who invested in these high-growth opportunities, they faced a terrible financial decay. Let's not forget, the primary goal of investments isn't just to make money, but to not lose it. So if you're trying to look to make money, then what's the point of even doing it if you also aim to lose it? Next into our next point. Suitable for the majority of investors. Let's agree. Not everybody has millions of naira, millions of dollars in their bank accounts. Not everybody is Warren Buffett. Not everybody is Elon Musk. So low-risk instruments, they cater for everybody because the average investor is a retiree, a parent saving up for their college fund, or just a typical individual earning minimum wage. So these low-risk instruments cater for each and every single individual willing to start their investing opportunity and investing progress. Another thing is that high-risk instruments usually have a high minimum investment fund, while low-risk instruments, you can start at any time, any amount, or anything you have. For most people, high-risk instruments isn't just an opportunity, but a financial roulette. Because what is the point of a 30% gain if you have an 80% loss the next quarter, the next night? High growth, high reward. I disagree. High growth, high uncertainty. High growth, high uncertainty. This basically means that, okay, I'm putting 1,000 naira into a bank, and this bank is telling me, okay, this can give you 90% reward overnight, or it can give you 100% of reward overnight, or in the next 1 hour, you can lose all of your money. Are you willing to take this risk? This money that you plan to invest, this money that you plan to put into things to grow your future, to pay for your children's fund, are you willing to just lose this? Our opponents may want to argue that high growth investments are necessary for wealth creation and economic progress. But let's be honest, at what cost? Where is this money going to go? If you lose this money the next day, do you have a plan for it? Do you have a plan for it at all?
60 seconds.
The quotes they showed on the board. A plan to failure to plan is a plan to fail. High growth instruments have no play. In conclusion, while high growth investments dazzle with opportunity, low risk instruments allow you to sleep peacefully at night. In a world obsessed with speed, let's focus on stability, sustainability, and most importantly, safety. And that's why I stand here to affirm that low risk instruments are better than high growth opportunities. Thank you.
Woo! Please give it up for Isabella Oyeleye. All right, she was represented Caleb British International School. So we're having the second person, who is Sanusi Samad. Are you ready? Okay, your time starts now.
Warren Buffett, a business enthusiast, once said to stop loss and take profit. With low-risk instruments, you are able to properly manage your risk and take profits. Low-risk instruments provide an avenue for anyone. You and I can invest with as little as 5,000 naira, as they just taught us. Low-risk instruments provide an avenue for anyone, be it retirees, be it students. They provide everyone with stability, liquidity, and peace of mind. Why go for high risk? Going for high risk opportunity, high risk growth opportunity is the same as saying because a guy is speeding to get to his location, we're going to ignore the fact that this guy could get in an accident. High growth opportunities are usually investors in high growth opportunities are usually clouded by the fact that there's high returns. But are we going to ignore the fact that the risk to reward ratio is higher than low risk instruments? Low risk instruments provide investors with stability, liquidity, and peace of mind. Meaning, a teacher from the crowd can invest his salary today and be rest assured that his money is not going to fly away tomorrow, or it be liquidity to a bigger prop firm. Low-risk instruments also provide investors with stability, meaning I can peacefully carry on with my day-to-day jobs and not worry about my investments. High-risk opportunities are seen as a savior to investors, but are investors truly safe? Are their money safe? Let's say I invest my money today in Codros. I know my money is not going to be liquid. I know I'm not going to
90 seconds.
I know I'm not going to be liquidated, and I'm not going to be liquidated to the market. Well, let's say I invest my money in cryptocurrency today. Let's say Bitcoin. I invest 100,000 naira in Bitcoin today. Bitcoin, yes, the risk to reward ratio is high, but what's the assurance that I'm not going to get liquidated tomorrow? That's where low risk instruments come in. Low risk instruments like treasury bills and bonds provide investors with an avenue to invest their disposable income and not have to worry about returns. Thank you.
Woo, please celebrate Samad, please. Also from Caleb British International School. I mean, I think we all agree with that. We've had a very thrilling round from both schools. But let's give it up for both of them. That's Whitesands Schools and Caleb British International School. Okay, so we're moving on to the next round. And we have the schools that will be arguing against the topic. So the two schools are Dowen College and Chrisland High School. So representing Dowen College is Olumide Makonju and Teresa Raphael. Who is the first speaker? You're doing a joint presentation. Okay, please give them a round of applause as they come together. Celebrate them, please.
Safety or success? It's your choice. Good morning, panel of judges, co-debaters, accurate timekeeper, and my ever-sustaining audience. My name is Olumide Makonju.
And my name is Cesar Raphael.
And we are here to tell you about something called investment dilemma. Now, I'm here to be against the motion that says that low-risk instruments are better than high-risk, high-growth opportunities. Now, I call this the investment dilemma. Why? Because in the vast investment world, there are two options. We can either go for low-risk instruments or high-growth opportunities.
Now, talking about low-risk instruments are financial assets which, when invested in, they give you low or predictable returns. They are better for retirees or people with short-term goals, which I feel like Chidoze's partner made a mistake in by saying that if you want to buy a house, you invest in low-risk instruments. That's wrong. Because it will not give you as much returns as you get using high-growth opportunities.
Now, let me talk about high-growth opportunities. Let me steal you for a minute. You see, high-growth opportunities involve things like tech startups, innovative companies, super billionaire companies. When I'm talking money here. I'm not talking cheap stuff. Now, you see, high-growth opportunities have so much more to offer. Cesar, why don't you tell us the benefits?
I'm talking about so much more. There's so many benefits. Higher returns.
1.
Wealth creation.
2.
Beating inflation.
3.
Fuel innovation.
4.
Youth advantage.
5.
Innovative support.
6.
Economic growth.
7.
Entrepreneurship encouragement.
8.
Large-term payoff.
9.
Reward vision.
10.
There's so many more.
What are we even talking about? Is this even an argument? Now, let me take you to wealth creation. Wealth creation is simply about making money. Let's not forget about our favorite one. Do you remember?
Yes, our favorite one, learning from loss. Unlike low-risk instruments, high-growth opportunities give you the chance to learn from your experiences. They give you the chance to build with wisdom and courage. Now, let me give you an example. The billionaires or millionaires of our generation, these people failed. Everybody fails when they want to start up. These people failed, and they use that failure to make them who they are now.
Speaking of billionaires, let's talk about Jeff Bezos, Elon Musk, and Mark Zuckerberg. You see, people called Elon Musk a fool when Elon Musk sold his stake at PayPal to invest in Tesla and SpaceX. They called him foolish, but now he's the richest man and the most powerful man in the world. Come on, that's something. Now, let's talk about Eric Yuan. Eric Yuan saw a problem, COVID-19 pandemic. We could not talk to each other. We could not move face to face, have conversation with each other. He decided to sell everything he had and invest into something called Zoom. I think we've all had classes here with Zoom. He decided to invest in something called Zoom. This Zoom has come to the marketplace. Now, this person has a net worth of over $5 billion. Do you know what I can do with that kind of money? Now, let's talk about Elon Musk. Elon Musk has a net worth of $409.3 billion. Now, let me tell you a story. There are two people. There's one that's in debt, and there's the other person that invested in Bitcoin early. You see, you can continue to listen to these ones here, telling you about the guys that are in debt, that you should go for low-risk instruments, go for this, go for that, or
you could be like the early Bitcoin investors. I'm talking about 2008. Let's talk about Tesla. That was when Tesla came in, around 2008. She said that people who went for low risk, they are happier, they slept better. While people, maybe, let's give an example, went for Tesla, the answer is happy. But then let's talk about now. People who followed low risk, are they happy now? Or let's compare them to people that went with high growth opportunities, e.g. Tesla. They are not happy. So even talking about Bitcoin investors, these are people right now, they saw change and decided to bet on it, and now they are making money.
Speaking of Bitcoin, if I remember correctly, in the early 2000s, Bitcoin could not even buy a slice of pizza. Now Bitcoin is valued at over $60,000. Now, the answer is simple. The answer is very simple and clear. High growth, if you want to be successful, listen to me. If you want to be, well, you know, high growth opportunities is the key. And high growth breakthroughs, we must use high growth opportunities consistently.
And if you want to be like our friends who decided they want to follow the slow path, the patient path, the restful path, and continue to remain on the same spot, then use low risk.
Safety or success?
It's all up to you. Thank you.
Please, okay. Amazing. That was a very interesting view. Thank you, Dowen College. Thank you so much. All right, so moving on to the next school. That's Chrisland High School, and then the representatives are Adefolaho Shogoleye and Okungberu Nifemi, who is So who's the you are the lead speaker? Okay. Just a minute. Start.
Elon Musk, Warren Buffett, Jeffrey Bezos. Regardless of your personal views on their approaches, I am certain you have heard these names before. These are not people who put all their money into savings accounts. Their success and wealth can be attributed to 3 simple words: high growth opportunities. Good day, moderator, panel of judges, accurate timekeeper, my worthy co-debaters, and my ever-attentive audience. My name is Oluwanifemi Okungbe, and I stand before you today to vehemently oppose the motion that says investing in low-risk instruments is better than investing in high-growth opportunities. To lay the foundation for our argument, we need to understand what the word investment means. Investment is the process of allocating resources, usually money, with the aim of generating an income or profit in the future. Now, let's consider the spectrum of investment opportunities before us and ask ourselves, which would we prefer? On one end, we have low-risk instruments. They prioritize the avoidance of loss and capital preservation, promising modest returns that frequently lag behind the pace of inflation. On the other end, however, we have high-growth opportunities, which, while carrying inherent risks, offer the potential for significantly higher returns. And in essence, isn't the spirit of investment all about the chase for greater value? High-growth opportunities, such as investing in emerging markets and startups, enable investors to build their wealth at a faster pace, achieving financial goals like early retirement more efficiently. One of my co-debaters said that high-growth opportunities are only for the wealthy. However, I'd like to challenge this mentality. Consider individuals like Peter Thiel, an American venture capitalist and entrepreneur. Thiel started his career journey as a mere law clerk, yet he took the risk when he saw the opportunity to invest in a small emerging company known as Facebook. Thiel initially invested $500,000 and over the years has reportedly accumulated over $1 billion from selling his shares. To put that into perspective, that means he generated returns of nearly 2,000 times his original investments. All this because he took risks, calculated risks, when presented with the opportunity. My opponents may also argue that low-risk instruments provide predictability, especially during times of economic uncertainty. However, I'd like to challenge this mentality. For what good is predictability if it means predictable losses and predictably low returns? Is the predictable erosion of your purchasing power something that should be seen as a benefit? In such an unpredictable world, it's in the face of uncertainty that opportunities are born. During the 2008 American financial crisis, while traditional businesses failed, Netflix saw its user base grow by over 25% in less than a year. And honestly, can any of us here imagine what our Saturday evenings and holidays would be like without Netflix, this direct product of high-growth opportunities to keep us
60
entertained?
seconds.
I'm asking every single one of you here, can you imagine what your life would be like without this high-growth opportunity? Of course, we acknowledge that high-growth opportunities do have their risks. They are volatile and require a much higher level of risk tolerance. However, these risks can be effectively managed, and posing them as insurmountable challenges is ignorant to that fact. Diversification and focusing on long-term perspective are all ways that high-growth opportunities risk can be effectively managed. In conclusion, while low-risk instruments offer a perceived sense of security, their limitations ultimately render them a less effective strategy for those seeking long-term wealth creation. By strategically embracing high-growth opportunities, investors position themselves to not just survive the global economic landscape, but to thrive within it. So, as I depart, I pose this question to all of you. Would you rather stay safe and stay broke, or take the risk and get rich?
Woo! Okay, all right, so we have the next speaker. Are you ready? Start.
We all know that money that is saved loses value over time due to inflation. Money that is invested has the power not only to retain its worth, but to grow exponentially over time. Good day, panel of judges, moderator, accurate timekeeper, co-debaters, and audience. My name is Ogunko Frida, and I stand firmly before you today to oppose the notion that states that investment in low-risk instruments is better than investment in high-risk opportunities. Firstly, I'd like to say that low-risk investment, although they are said to provide security and predictability, they often fail to provide what most investors desperately seek, which is significant wealth creation and financial freedom. High-growth opportunities, on the other hand, such as stocks, startups, and real estate, offer the potential to use significant interest as they yield about 10 to 20% of annual returns. Another advantage of high-growth opportunities over low-risk investment is the fact that they help us reach our financial goals faster. Whether it's buying a car or a house, starting a business, or retiring early, when your money grows faster, you don't have to worry so much about how much you're losing because you'll be spending after saving, now saving after spending. Take, for instance, the story of Ronald Reed that invested in blue-chip stocks and turned into from a journey to a multi-millionaire. Masayoshi Son that invested in Alibaba and invested $20 million and got over $100 billion US dollars back as return. Subsequently, I'd like us to acknowledge the fact that low-risk investment barely keeps up with inflation rates, meaning that your money is losing value in real terms while it's being kept safe. Let's say you have a savings account that has a 2% return rate and a 4% inflation rate. Wouldn't that essentially shrink your purchasing power? In this world where inflation eats away at value, how safe exactly is the 2% return? Let's face it, if it's security you're seeking, if it's safety you're seeking, forget about it. Because in this world where inflation eats away at value...
90 seconds.
How exactly is there security in business? My opponents may still stand and argue that there is in fact security, but is it really safe if it becomes destructive over time? No, it's not. It's just subtle degradation masked as safety. So I urge you to take the risk, because what is the real risk? Volatility or stagnation? Make that investment and watch your money grow, because in this world of rising costs and economic transformations, the greatest risk one can take is standing still. Are we investing to avoid regrets or to build the future? Remember that security may be comforting, but growth is in fact liberating. Thank you, and I hope I've been able to convince that the risk is worth taking when investing in high-growth opportunities.
Woo! Please let's celebrate her. Okay. Can bring it back. The mic. Okay, amazing. Please let's celebrate every one of these debaters, every single one of them. Please appreciate them. All right, thank you. We've had a very thrilling round. We'll give our judges time for them to collate the results, and then we'll know which of the school is advancing. So while they do that, I have some games to keep us engaged, and I have gifts. Are we ready? Okay, so whether you're ready or not, we are going to play some videos. I will just maybe put the mic in the audience. Let me just have you audit for me. Fumi, could you help me keep scores? So at the end of it, whoever gets the highest, the two people that answers the question the most. Okay, all right. So this one says, I speak without a mouth and hear without ears, but I come alive with wind. What am I? Do you want me I can't hear you. A what? A wind. Is that what you said? No. I should repeat the question. Oh, okay. I speak without a mouth and hear without ears. I have no body, but I come alive with wind.
A rumor?
Nope. Rain? No. Thunder? No.
Windmill.
You're close. It's around an echo, yes. What's your name, please? I don't understand. Her name is Jessica. Please let me take note of that. Okay. Everyone should know this, and I do not want chorus answer. Are we ready? What has hands but can't clap? I don't want chorus answer. A clock. Yes. What's your name, please? Ebuka. All right, the next one. I am tall when I'm young, and I am short when I'm old. What am I? No chorus answer. A candle. Yes. What's your name, please? Isabella. Okay, so we're having 1-1 so far. What has a neck but no head? What has a neck but no head? Which part of no chorus answer did you miss? Should we give him? No. Yeah, so we give him. This is the last time. If I hear a chorus answer, I will cancel it. What's your name, please? Daniel. Dari. Darrell. Okay. For me, please, have you noted that? Thank you. Okay, the more you take, the more you leave behind. What are they? Yeah, footsteps. So yes, I'll give you that. Okay, Isabella has 2 now. What comes once in a minute, twice in a moment, but never in 1,000 years? Wow, I saw your hand first. Sorry? The letter M. What's your name, please? Israel. Adrian. Okay, for me, please, Adrian, 1 point. Okay, what has one eye but can't see? Storm. No. Flashlight? No. A needle, yes. Oh, sorry, I didn't see you. So he has 2 points now. For me, please. Okay. What can travel around the world while staying in the same corner? We should all know this. I saw his hands first. Time. No. I saw you. Shadow. No. A stamp. Sorry. I missed you again. So he has 3 now? Okay. What has to be broken before you can use it? An egg, yes. So Isabella has 3 now, or 2, 3? Okay. What begins with a T, ends with a T, and has a T in it? Yes. Okay, you're on fire. So you got it. What is full of olds but holds water? A sponge. You got it. Okay. I looked there first. Okay, so I'm for you guys now. The more you take from me, the bigger I get. What am I? A hole. So he has. What's your name? Okay. Okay, the next one. You can catch me, but never throw me. You, yes. A code. Yes, he got it. 1 point for him, please. Okay. What can you hold in your left hand, but never in your right hand? Yes, he got it. Your right elbow. Okay. What has many keys, but can't open a single lock? A piano. So Isabella again. Fumi, are we good? Can I continue? Okay. What goes up but never comes? I don't want to answer. Okay, my eyes went to you first. So age. So yes, he got it. You can what can fill a room but takes up no space? I saw him first. Silence, no. Lights, yes. Isabella. Okay, if you drop me, I am sure to crack, but give me a smile and I will smile back. A mirror, yes, he got it. What's your name? Izu. What 5-letter word becomes shorter when you add 2 letters to it? Short, yes. It becomes shorter when you add 2 letters to it, so ER. I have keys but no lock. I have space but no room. You can enter but not go outside. What am I? A keyboard, yes. Okay. What kind of tree can you carry in your hand? A palm tree, yes. She got it. Okay, so Fumi, give me what's your name, please? Judges, are we ready? Yes, you need to collect. Yeah. Yeah, Fumi. Give me the top 3. Or let me just know. If anybody has a tie, just let me know as well.
Okay, Ebuka.
How many
Isabella,
points?
That's 5-5. Draw.
Okay, Ebuka, Isabella, please come outside. Please, let's celebrate them. Let them come outside. Okay.
We have Idrel.
You have Israel.
Idrel.
Israel, how many points?
2 points.
2 points, okay.
Then Ike, 2
How many
points.
points? 2 points.
Yeah.
That's all?
Yes.
Okay, can 2 of them come out? Adrian. Okay. So his name is Adrian, please. Yes. Okay, so this game is a bit tricky, right? Maybe I'll start with you. Who's your best guy in this room? Your person that you know that you can rely on any day. Think carefully. Your face lies in this person's hands.
Nifemi. Yes.
Who else got 2? You, right? Okay, who's your best buddy in the building?
Olisa.
Okay. Okay. Can I have you and Isabella step down for now? Because you guys got the same. And then you guys can come together. Okay. So we're going to play a game of charades, right? So one of you will be the describer and the person will guess. That's why I said you should choose carefully. So decide among yourself who's going to describe and who's going to guess. Let me know when you're ready. You ready? So who's describing? You? Can you come here? Come here, so I'll show you. Okay. Why are you moving closer already? Okay, so this one. Let me just be close. This first one. You can only guess twice. Start. Yeah, you can make sound. We have one more. I said you can't. I'm going to give you this time. You can't say doing what? A dog barking, yes. So you have 1 point. For me, are you still taking notes for me, please? They've gotten one. The second one. What's the question? Is that a statement? Yes, a phrase. Yeah, you got it. So they have two. Okay, so who's the one doing it? Okay, then come here, please. You do this. You can only guess twice. You can only guess twice. Do you want to do it again? No, you have one more. I said you cannot. Just one more. You have just one more guess. Just say anything. Huh? Uh-huh. Yes. So you got it. The next one. This one. Did you... I can't hear you. Are you guessing? I'll start giving you countdown now. You're taking time. Huh? Electricity. No, you have one more. A snake what? Isin. Well, yeah, we can give you that. So 2-2. Okay. Huh? Okay. Alrighty. So we'll go. And these people, they are celebrities. So we're moving to celebrity segments now. Okay? Are you guys okay with them switching? No. They're ready? Okay. So we've lost two. Just one more. You can't say a word. Just act it. Mess up. Act it. 1. I'll count it to 10. 2, 3, 4, 5, 6, 7, 8, 9, 10. Sorry. Do try it now. This person. 1, 2, 3. You can't say anything. 4, 5, 6, 7, 8, 9, 10. Davido. Can you switch? No, can they switch? You want them to switch? Okay, then switch. Last one. This person. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Sorry. Are you still the one doing it? 1. I literally give you a hint of what to do in front of you. You guys are not looking at it. 3, 4, 5, 6. Oh my God, he got it, Vanna boy. Okay, so you guys, A for effort. Let me give you gifts. Who gets what? And then both of you get this. Thank you so much. Please let's celebrate them. Okay, so who are your people? Let's do it fast. Our judges are ready, correct? We'll do it after. Okay, so we'll do it at the next round. You guys, I'll come back to you. Let's take the judges now. So start thinking of your person. All right, so who's going to announce it? Arnold. Can you use the mic? Yeah. Come to front, yes. Please let's celebrate him as he's coming outside.
Good afternoon, everyone. I have to say, though, it's you guys are incredibly impressive. Incredibly, yeah. Please. Sitting as a judge, listening to you guys, I wish I had your depth of knowledge when I was your age. I honestly can't believe how incredibly financial literate you guys are. So please, another round of applause for yourselves and everyone. Low risk and high reward, or low risk and high growth is a debate as old as time itself, as old as money itself. You know, do you go low risk? Do you go high risk? So in this, there's no winner, there's no loser, because, like I said, it's a debate that I have within myself. We all investors have, from Warren Buffett to Mr. Balahon, I know. So regardless of how the scores turn out, I want to repeat, there are no winners and there are no losers. Just, you know, the more persuasive side, should I say, the more persuasive person. So I'll just read the scores, the college and the the school and the scores of the winners, or the guys that are going to the final debates. On the low risk side, the guys that go to the final debates is Whitesands School. And on the high growth side, Dowen College. So thank you, everyone. And as we go to the next round, thank you.
So the school for 4 is who?
For the low risk is Whitesands.
Okay, so Whitesands College. Please celebrate yourself. Okay, and the second one
Dowen
is
College.
Dowen College. Okay, so please celebrate yourself. All right, thank you so much, Arnold. Please let's appreciate Arnold as we go back to the seat. So we're taking the second round. Okay, all right. So we're moving into the final round, and you would have 5 minutes. So who's going first for Dowen? Yes. I guess you come back together. Yes. Say that again. Yes, immediately. Yes. So I need both of you out. Please celebrate them as they come outside. Are you allowed to bring what? Your what? Yeah, you can. Okay. All right, so you have 5 minutes in total. How do you guys want to do it?
We're doing in total.
Yes. So you can decide to say you would do 3, she would do 2. I'm giving you guys to decide. Or you want to do 2 minutes, 30 seconds each?
3 and
2, okay. All right, start.
Good morning, my ever panel of judges, my accurate timekeeper, my co-debaters, and my ever attentive audience. Today's topic isn't just about finance, it's about choices. Now, let me talk. A savings account in Nigeria may give you 2 to 4% per year, but inflation is actually about 20%, so you're actually getting poorer as you're investing. Now, compare that to high-growth investments. Tesla stock rose over 23,000% in the last decade. Bitcoin went from worthless to over $60,000. Flutterwave, a Nigerian startup, is now valued at over $3 billion in less than 10 years. Elon Musk sold his stake in PayPal and they called him a fool. But now he's the richest man in the world. Let me come back home a bit. You see, Aliko Dangote, Africa's richest man, started by trading salt and sugar. Now he owns the world's largest refinery in Africa, worth at $13 billion. Jeff Bezos left a high-paying job of $100,000 to $200,000 to sell books in a garage. They called him stupid. There's nothing they didn't call him. How you leave $100,000 to start selling books? But now that garage is known as Amazon. I mean, this shirt is from Amazon. Now, these people didn't choose the safe path, but they chose the smart, bold, and the growth path, and it worked out. They say low risk is better, but let me ask you this. If low risk was better, why aren't the world's richest people investing in savings and bonds? Please answer my question. Why do they invest in stocks, tech, and companies that transform the future? If the wealthy and wise aren't playing safe, why should we? But we say not all debt is bad, because I know they will bring up the fact that Nigeria is in debt. But you see, there's something called reproductive debt. This is borrowing to build an empire. Look at Dangote's refinery. The Nigerian government backed it up, and that is debt with a purpose. That's what we call an investment. You see, let's look at Singapore, South Korea, and the Asian tigers. These countries were once poor. Today, they are first world economies because they invested in high-growth sectors. So again, I ask, why are we being asked to fear what evil nations embrace? You see, why are we being asked to fear what evil nations embrace? There are numerous benefits. It beats inflation. While low-risk tools grow slowly, high-growth assets can multiply your money. It encourages innovation. Startups and tech companies which drive modern innovation survive because of bold investors. It creates job and growth economies. It teaches real financial skills. It's how the world works now. So let me ask you, do you want to hide your money in fear or grow with vision? Do you want 5% in returns or a short at 10 times returns? Do you want to save for life or build an empire? Because salaries don't build wealth.
30 seconds.
Low risk may grow your money, but high growth opportunities multiply it. Thank you.
Woo! Okay, so we have the second speaker come up. Are you ready?
Time starts.
Are you ready?
Yes.
Start.
Okay, good morning, my beautiful judges, my accurate timekeeper, my co-debaters, and my audience. Today, I am not here to confuse you, but convince you. And I am here to go against the motion that states that high growth opportunities are not better than low risk instruments. Now, let me start with one thing. Let me go with what my co-debater said. He said that Nigeria is currently in debt. Now, one of Nigeria's biggest problems is inflation. One of the major causes of inflation right now is low-risk instruments. Now, let's say, for instance, inflation is 5%, and your account yields 2%. Your money is losing power. That means inflation is going to increase, which is one of the causes of biggest problems in Nigeria. Now, let me give you another point. The amount of money you get back, your returns. For example, S&P, it gives you the return, S&P 500 gives you the return of 10% yearly, while government bonds gives you 2 to 4%. Because at the end of the day, yes, wealth will make you richer, but then wealth will also give you a chance to boost your money and then boost what you use it for. Now, innovation. Innovation now, for instance, high growth opportunities gives you a chance to innovate. Let me give you an example, a case study, BioNTech. BioNTech is a German company that started from nothing. But people invested in them and they boomed. BioNTech worked with an American organization that gave us our vaccine for coronavirus. Now, people who invest in high growth opportunities, they saw a change and their reward is wealth and a front row seat to innovation. Another point, they appeal to people that are young and have long-term goals. People who are young can make mistakes and still learn from their mistakes because they have so much time. They can make mistakes and then they'll still learn from it. Like our young sir here, him and his family made a mistake of going into a bad investment. But he used that mistake to learn and grow.
4.
Okay, I would like to end my point here. Thank you.
2, 1. Okay, please, let's celebrate them, please. All right, up next we have Whitesands School. Okay, so you guys have 5 minutes. How do you want to do it?
2 minutes, 3 minutes.
Sorry, you do 2 minutes?
2 minutes.
And then, don't worry, you do 2 minutes and then you do 3 minutes. Okay, all right. Just a minute. Start.
Do you ever wonder why no country has ever adopted cryptocurrency as a #1 currency? Good morning, panel of judges, accurate timekeeper, and the audience. Let's face it, most people, especially teenagers or their parents, do not have the time to study the stock market, track business news daily, or learn the nitty-gritty details of investing. This is where low-risk options shine. They're easy to understand, perfect for anyone just learning how money works. You don't need to be a financial genius to understand to invest your money in a savings bond or a money market fund. It's as easy as putting money in a bank and earning easy, stable, and required interest. Some investment firms even make this process easier by prioritizing safe and consistent products over hype and high-risk instruments. Rather than gambling all your money into a high-risk instrument, you can make
60 seconds.
You can make stable and steady income by investing little pockets of money into this low-risk instruments, and that returns that you get from the low-risk instruments, you can further invest it into other low-risk instruments, and then your money compounds, and then you get enough more and more income. With the amount of Warren Buffett, with the few Warren Buffetts, few Elon Musk, and few Mark Zuckerberg in the world, there are a million other people who have lost money to CBEX scams, to cryptocurrency scams, to falling buildings, to crashing economies. There are lots of other people who are being targeted by investing a lot of their income into high-risk instruments. With this strong foundation, my partner will further take into
10 seconds.
Thank you.
Please celebrate him. Let's celebrate him. Just a minute. Start.
Good day, panel of judges. Good day, accurate timekeeper, my fellow debaters, and members of the audience. My name is Olisa Obika, and I'm here to appeal to you that on the motion which says that investing in low-risk instruments is better than investing in high-growth opportunities. Firstly, low-risk instruments are backed by strong institutions. If you wanted to build a house and you wanted to start and you wanted to do the first thing you would do is to ensure that the foundation is correct. You make sure that the wood used in the house is the best of the woods. Because what if the house doesn't look good? What if the house doesn't end up looking good in the end? But this is strong, stable, and secure, and to never fall. That's the same thing that happens when you invest in low-risk instruments. Low-risk instruments like FGN bonds and cordial treasury bills are backed by the government's creditworthiness. So you're sure that the risk of default, loss of capital, or fraud is very low. And then, if I gave you a chessboard and for every day you have the chessboard, you get 1 cent. The chessboard has 32 pieces. If every day your money keeps on doubling, how much money do you make over that period of time? You make an amount of money that is so astonishing that you'll be able to believe it. That's how compound interest works. Low-risk instruments are subject to compound interest because they give you stable and steady returns. Returns as modest as 5 to 6% can snowball into substantial amounts of wealth over long periods of time because that's how compound interest works. High growth opportunities give you high wins and high losses, but that's not how compound interest works. Your investment is up by 25% one day and it's down by 25% the next. How will you have peace of mind? How will your money you make be able to compound? And there's the last final thing. We are expected to start investing young. But how do you start investing young when you don't have huge amounts of money? With low-risk instruments, you can invest with as little as 1,000 naira. You know, if you ask your parents for 1,000 naira, they'll give it to you if you say you want to invest. But to invest in lots of high-risk instruments, you need substantial amounts of money that's not available to us.
60 seconds.
So, in conclusion, this is why I believe that low-risk instruments are better than high-growth opportunities. While high-growth opportunities offer the ability to multiply your money, but it's not a sure thing. With low-risk instruments, you're sure that you will get your money back and that there's always the ability to grow your money. And I'll leave you with this. If I gave you 1,000 naira today and I told you I'll come back tomorrow, if you're lucky, I'll give you 2,000. If you're lucky, you give me 1,000 naira today. If you're lucky, I'll come back tomorrow, I'll give you 2,000 naira. If you're unlucky, I'll take your money and I'll never come back. What if I gave you 100 naira and I said, I can assure you that tomorrow I'll bring back your 100 naira. And if you're lucky, I'll give you an extra 10 naira. Would you rather lose the whole 1,000 naira? Or would you take a gamble at the chance of making 10 naira back, knowing that no matter what, you still get 100 naira tomorrow? Thank you.
Thank you. All right, representative for all of the debaters, please. Please let's celebrate the representative from both schools. Okay, all right. So for the announcement that was made earlier about the winners, we got some feedbacks that you would like to know what your scores are before they announce. So Hannah, could you please just let us know their scores from the last one that you did?
Okay, so Whitesands, from the first debate of the first round, Whitesands scored 319.
Woo! Please celebrate yourself. Please stand for yourself, please.
Caleb British International School scored 316.
Woo! Please.
Dowen College scored 384.
384. Celebrate yourself, please.
And Chrisland High School scored 335.
Okay. All right. Thank you so much, Arnold. No, the mic. All right, thank you. So give our judges more time for them to deliberate. So can I have Isabella and remind me your name, please? Ebuka, back on stage, please. Thank you. Okay. So who's your person? Name. What's the person's name? You don't know her name and she's your person. We are going to drag the person out. Go Go and meet the person to come out. Who's your person?
Cemetery. Water.
All right, so who's going to be describing and you describe? One, two, I started with 3, 4, 5, 6, 7, 8, 9, 10. And you are close, just didn't get the right words. So, because we're close, I'll just say the answer. Dancing in the rain. Okay, so. Oh, who is describing? Okay. Okay, so 1, 2, 3, 4, 5. She's trying to describe a movie. 6, 7, 8, 9, 10. That's it. Stop. One, 2, 3. Remember, it's a movie. 4, 5, 6. Remember, it's a movie. 7, 8, 9, 10. Deadpool and Wolverine. Okay, so she's describing an artist. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Who's describing? He's describing an artist. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Tiwa Savage. Who is next? Okay. You can make a sound, yes. 1, 2. Yes, you got it. For me, please, 1 point for them. Are you ready? 1. Tell me what you're describing. 2, 3, 4. Yes. For me, 1, 1. See the one doing it? She got it. 2. Are you ready? 1. Judges, are you ready? Are you ready? Okay. 2, 3. Yeah, we can give it up. Okay, so 2, 2. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You're very close. You ready? Okay. Yeah. Ready? 1, 2. Wow, so we have what? 3-2 now, right? For me, is that the score? They've just got another one. Okay, so let's celebrate both of them, please. So it's fair to say you won. Just a minute. All right, please, let's celebrate. Then you guys can go back to your seat now. Thank you all so much. Are we ready? We're ready? Okay, so who's the name? You need to come out. Sorry, you need to come out here. Sorry, Fulasha, hold on.
No, I didn't say that they project it on the screen. This cause. He said that. Where is she? I just came out to look for her. See my myself.
Okay, so we'll give the multimedia team time. Okay, I still have more games and I still have more gifts to give around. So this one is individual. They are almost done. They just need to compile it and then project. So in 5 minutes, we'll be done. Sorry for delaying you. Okay, so tongue twisters. We're all familiar with it, right? Please, multimedia, say when you're ready, just let me know so that we can stop. Are you ready? So listen carefully. You just have to say it 4 times. All right? The first one, financial freedom fuels front-field future. Financial freedom fuels front-field future. Nobody heard me. Financial freedom fuels front-field futures. Front-field futures. You want to try it? I'm just saying lots of. You want to try it? Please come. One by one. Okay. Financial freedom feels fun, field, futures.
Financial freedom fills fun-filled futures. Financial freedom fills fun-filled futures. Financial freedom fills fun-filled futures. Financial freedom fills fun-filled futures.
Amazing. Let's celebrate her. Okay, so the next one is saving smartly sets solid spending standards. Saving smartly sets solid spending standards. Saving smartly sets solid spending standards.
Saving smartly. Saving smartly sets solid spending standards. Saving smartly sets solid spending standards. Saving smartly sets solid spending standards. Saving smartly sets solid spending standards.
All right, the next one. 10,000 tiny transactions takes time to track. Ten 10,000 tiny transactions take time to track.
10,000 tiny transactions take time to track. 10,000 tiny transactions take time to track. 10,000 tiny transactions take time to track. 10,000 tiny transactions take time to track.
Okay, amazing. Put me up here. Give me record. All right, this one, I think we should all know it. She sells seashells by the seashore. You gotta come.
She sells seashells by the seashore. 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 And she sells seashells by the seashore.
Good attempt. Please celebrate her. Somebody else raised their hand. Do you still want to try? Yeah, come.
Calm down, I'm warming up. She sells seashells by the seashore. She sells seashells by the seashore.
Can you leave him? Continue. You can start.
She sells seashells by the seashore. She sells seashells by the seashore. She sells seashells by the seashore.
Please celebrate and clap for him. All right, so this one, a proper copper coffee pot, a proper copper coffee pot, a proper copper coffee pot. A proper copper coffee pot.
A proper copper coffee pot, a proper copper coffee pot, a proper copper coffee pot, a proper copper coffee pot.
Amazing. Please clap for her. Okay, the next one. Can you can a can as a canna can a can? Can you can a can as a canna can a can? Can you can a can as a canna can a can? Want me to repeat it? Can you can a can as a canna can a can? Can you can a can as a canna can a can?
Can you can a can as a canna can a can? Can you can a can as a canna can a can? Can you can a can as a canna can a can? Can you can a can as a canna can a can?
Okay. All right. The next one. I think you should all know this. Fuzzy Wuzzy was a bear. Fuzzy Wuzzy had no hair. Fuzzy Wuzzy has no hair. No, the one at the back.
Fuzzy Wuzzy was a bear, Fuzzy Wuzzy had no hair. Fuzzy Wuzzy was a bear, Fuzzy Wuzzy had no hair. Fuzzy Wuzzy was a bear, Fuzzy Wuzzy had no hair. Fuzzy Wuzzy was a bear, Fuzzy Wuzzy had no hair. Fuzzy Wuzzy was a bear, Fuzzy Wuzzy had no hair.
Woo! Okay. 6 slippery snails slide slowly seaward. 6 slippery snails slide slowly seaward.
Six slippery snails. Sorry.
6 slippery snails slid slowly seaward. 6 slippery snails slid slowly seaward.
6 slippery snails slid slowly seaward. 6 slippery snails.
Appreciate her. Anybody else wants to try? Can you come forward? That's the last person. Double up, please.
See slippery snails, slowly slippery, see slippery snails, see slippery see slippery sails, see slowly slippery, 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 see slippery sails, see slowly slippery.
Please appreciate him. Okay, so we have the results ready. I will call Mofolo Asha again to do the honors.
Thank you very much, Bisola. Good afternoon, everyone.
Before you proceed, we just take comments for all the judges. So you just do last, then we start from. Just general comments.
All right. Good afternoon, everyone. Yeah, my name is Olainka, and from the performance of the four schools, I believe that every one of them, they're very bright and very, very knowledgeable about what they are prepared. So. But they have to be someone going home with the first prize. If not, I'll have given all of them the same prizes, you understand? So I appreciate all of them. Thank you.
Thank you so much.
I would say that there are some schools here, from the debates that we saw, that literally, there's a way they say it. They say aura for aura, but they say it's oha for oha. And they give it back to back. And I really loved the performance. I like the confidence. And I really love that, a lot of them put themselves very deep into the financial, situation to be able to get the topic and able to compete very well. And I love the confidence. I love the confidence. If I was to be able to give the grand prize from the very first session we had, we would have done that already. But I love their confidence. I love that everybody came on stage, and regardless of, who they are, regardless of their level of education, they were able to give us very great, information, knowledge about the subject, and I really love their confidence. Again, I love their confidence. Well done, everyone. Well done.
Thank you so much, Manu.
I'm still shocked and impressed with the knowledge and confidence and ability of each and every one of you. I think that each and every one of you have done amazingly well, or did amazingly well. I'm going to repeat myself, but there is no right answer when it comes to low risk or high growth. It's just it's a debate as old as time, as old as money itself. But well done to everyone. One thing I hope that each and every one of you walks away with the knowledge, and not just cramming or whatever it is you had to do, whatever exercise you had to do to go through this, but walks away with the actual knowledge to be able to practice everything that you've picked up or learned through the process from now until for the rest of your life, and it will make you a much better person and a wonderful and amazing investor. So well done to each and every one of you.
All right, thanks so much, Hannah. Yeah.
Okay, thank you very much. And just to round it up, I really want to appreciate each and every one of you. You literally took your time. I learned, which is a plus, and like all the other judges have said, you did put up a great performance. Knowledge-wise and confidence, it's applaudable. Well done to every one of you. Well done. Okay, so now we're going to announce the results. Have to crown someone the winner. So we have, can I please have the results up, please? So we had the school with a total score of 354. Oh, I'm going to get out of the way so you can all see. A school came up with a total score of 354, and the other school came up with a total score of 336. So please, a round of applause for all participants. Okay, and now I have the honor of announcing that the winner of the 4th edition, no background music.
Drum rolls.
Dowen College.
Woo! Please let's celebrate them. Please celebrate them. Please let's celebrate them. Amazing.
Well done, well done.
Okay, all right. Please, can I have all the judges on the stage? All the judges on the stage. All the judges on the stage. Can I have the paparazzi?
Second place. Apologize.
Okay, so a group picture, sorry. So, can we have the videographers and the photographers so that we can take pictures? Please come together, the judges. What's that? Yes, yeah. Yeah, you take it. Do we have this shot so I can have people join them? Do we have it? Okay, okay. Please let me know where you have it so I can ask them to join. Okay, then we have Adekbola and Aino join them. And Adenike Ogunyali, I know she was there. Do we have it? Do we have it? Okay, can all the debaters join them? Sorry, please just keep standing. Can all the debaters join them? All the debaters, please join them. Hurry, 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 hurry. Nkechi, you need to arrange them, please. Okay, let's, you can all go back except GB and Adenike. So we take the debaters one by one. We'll start with Dowen College. Please celebrate them as they come back. Okay, do we have it?
For Dowen. Dowen is
Are we done? Okay, let's have another. They come back. Let's have. Sorry, come back for your plaque, please. Come back for your plaque.
teacher should have sorted. Here.
Sorry, can Olumide Makonju come back? Okay.
What's her name?
Tessa Raphael.
Wait.
Sorry, what's her name?
Tessa.
Teaser. Yeah, I've not seen her.
Tamara.
What's her name?
Let's present this one.
Okay. Which school is that? Whitesands. Can they come up, please?
Tamara.
Is her name Tamara as well?
Come. You should just call out the names. Take the mic. Have it.
Because I should just call their names randomly. Debaters. Okay, so we'll be calling on the debaters to pick up their certificates. Sanusi Abdul Samad. Well done. You did a good job. Olisa Emeka Chukwunweke. The next up is Isabella Oyeleye. After Isabella, Chiedoziem Adego. Okugbure Nifemi. Okungbe. Okay. So these ones are not debaters, right? Or there are some debaters in there. Okay, so I'll be calling everyone from the audience to pick up their certificate of participation because you participated today at our financial literacy session, so you deserve a certificate. Okay, guys, I understand that you've been here all day, and we really, really appreciate your time, but we are almost done. It won't be nice for you to attend this type of financial literacy session, and then you will not have your certificates. Do you agree? Okay, so please just give us a few more minutes. We are almost done, right? And then you like to take pictures too, right? Yeah, because today is a memorable day, huh? Okay, so let's do this. Enuosa Tamara. Odion. After Enuosa, can I have Praise Ezike on standby and Odunaike Omoteniola on standby? Who's taking pictures? Pictures. Take them. Take pictures too. Praise Ezike. Odunaike Omoteniola, please get ready. Odunaike Omoteniola. Okay, can we have Eniola Adegboyega? Eniola Adegboyega. Adrian Okafor. Adrian Okafor. Which one? Eniola. Adrian Okafor. Tobechi Oguledo. Tobechi. Fiyesimi Oduloju. Fiyesimi. Odua Adams Aliu. Patrick Okuigbo. Falaye Loni. Falaye Loni. Falaye, sorry. Eniola Elegushi. Okay, guys, we're not done yet, so I would like you guys to settle down, please. So we are going to give you your gifts, your lunch, and all of that in a jiffy. Please, so just settle down. We want to take a few pictures with everyone. Please, we are almost done. We are almost out of here. We just need you guys to settle down so that we can organize better. Please. Thank you. Oluwasumitire Komla. Chukwebuka Richard. Angel Chibo. Angel Chigbo. Nifemi Ojo. Angel Nwamadu. Desiree Akamo. Wisdom Ejire. Ore Oluwa Adeniji. Wisdom Ejire and Oreoluwa Adeniji. Sure. Emmanuela Udenani. David Amisu. Ike Oluwa Olatunde Lamidi. Ogene Ruona Isaac Isiawe. Belu Olisa Onyechi. Ruben Oshoma. Busayo Fatade. Eze Obi Munachi. Eze Obi Munachi. Busayo Fatade. You're almost done. Moyosire Banjo. Izuchuku Agbim. Asnath Zulu. Thank you. Asna? Zaren Ohio Moba. Samuel Collins. Okonkwo Frida. Is there anyone here that didn't hear their names? What's your name? Okay. Afolahon Shongoleye. Is there anyone else? Is it just you? Anyone else? Didn't hear their names. What's her name? What's her name? Tilda. Tilda. What's your name? Tiza. Okay, so we'll take your name and we'll have it sent to you. You're from Dowen, right? We'll have it sent to you. Apologies for that. Thank you. Okay, so Chrisland and Caleb British, I have something for the debaters. So if you could just come up here, let me just give you something small, quickly, just to appreciate you for your efforts. Caleb British. Okay. You guys did an amazing job, right? It's not about the competition, yeah? Yeah, it's about the effort, right? And then you put in your best. Yeah, yeah. Well done. Okay, so just something small from Codras. Picture. Thank you so much, everyone. We have come to the end of this debate competition. I was wowed. I also learned a lot from all of you, even though I've been doing this job for a few years now, but I still managed to learn from you. And I also like the fact that you guys were able to land your point as if you knew. I mean, I think at this point, you guys have the knowledge. I have to give it to you. So please give yourselves a round of applause. A big one, a very big one. Can we do that again? I think some people are distracted over there. Please give yourselves a round of applause. Thank you so much for coming. I know it was a challenging task for some of you. Some of you are on holiday already, but you still managed to come. So thank you so much. So for Whitesands and Dowen College, we would like to have interviews with you before you go. The debaters, please, the media would like to hear what you have to say about today's event. So please give us a few minutes of your time. Thank you very much. What? Thank you very much, everyone, and have an amazing rest of your day. Bye. See you next time, maybe. Thank you so much. Thank you.
Thank you so much for coming.
Thank you, everyone.